Welcome to the desk. Grab a seat. You've cleared the certification exams, और अब तुम officially एक research analyst हो. Congratulations! But let me tell you, passing that exam, that was just the warm-up. असली काम अब शुरू होता है. Today, we're diving into Chapter 13 of our training, focusing on the qualities of a good research report. I'm here as your senior mentor to guide you through this explainer because surviving in institutional investing requires way more than just crunching numbers on a spreadsheet. You are now the protective shield for our investors' capital. We are going to learn how to craft a report that doesn't just sit on a desk, but actually drives massive financial decisions.
Think about this for a second. If every single analyst in the market has access to the exact same data, the same annual reports, the same quarterly results, the same management interviews, how do you stand out? The answer is simple, but honestly, mastering it is hard. The Mara communication or presentation makes all the difference. Look, all good analysts will spot the same trends. The real magic lies in how you structure your views, how you draw your conclusions, and how you present your recommendations. So here's exactly what we are covering today. Number 1, the art of research reports. 2, core pillars of good reports. 3, planning, drafting, and editing. 4, fact versus view-based sections. 5, integrity and unbiased judgment. And 6, the ultimate checklist approach. Okay, let's jump right into Section 1, the art of research reports. First things first, a research report is never just a data dump. Please never treat it like one. It's a strategic, multi-purpose document. इसकी 3 main काम है. You need to present a compelling investment idea, provide a broader market perspective, and offer a detailed surgical analysis of the company. Your institutional clients are going to rely on this very document to make absolutely massive financial decisions. They are trusting your creative ability to translate dry, complex financial realities into crisp, actionable intelligence. Moving on to Section 2, core pillars of good reports. These are your absolute ground rules for success. Clarity or simplicity सबसे ज़रूरी है. I know you might be tempted to use heavy financial jargon to sound smart. Don't do it. Complex language should never get in the way of a simple, clear narrative. You need a strong narrative structure that presents your argument so clearly that a busy portfolio manager can grasp your entire thesis in just a few minutes. And always customize your tone to your reader type. Remember the golden rule. If you cannot explain it simply, मतलब तुम्हें खुद ठीक से समझ नहीं आया. On the flip side, let me warn you about what not to do. During the chaotic Indian quarterly earnings season, thousands of reports flood the market. So why do most of them end up straight in the trash? Rookie mistakes. Things like flooding the page with completely unnecessary details, or writing incredibly long sentences that lose the reader halfway through. Lacking a proper structure is a big one. But the worst of all, inconsistent views. If paragraph 2 says a company is struggling, but then paragraph 5 projects massive, unhindered growth, your credibility drops to 0. Avoid these pitfalls at all costs. All right, Section 3, planning, drafting, and editing. Report writing is a strict 3-step process, and your discipline here is non-negotiable. Step 1 is planning. You have to approach each section logically and set strict internal deadlines for yourself. Step 2 is drafting. Don't try to reinvent the wheel every single time. Use our predefined organizational templates to structure your thoughts. And Step 3 is editing. Recheck every single financial figure, run those spell checks, and fix your grammar. Let me tell you, jab results season hit karta hai, the workload is absolutely insane. If you delay even one section, that cascading delay will cause you to miss your publishing window entirely. Let's look at Section 4, fact versus view-based sections. Your report is fundamentally divided into fact-based and view-based sections. Fact-based sections, things like peer group analysis, shareholding patterns, and key financials, are pretty straightforward. You're sourcing these directly from annual reports and databases. But the view-based sections, analyzing the core company business, identifying hidden concerns, providing an industry overview, yahan tumhara asli test hai. This requires deep personal understanding and talking directly to company management. You cannot just copy-paste a view, you have to actively build it. Which brings us to Section 5, and honestly, the most important part of this entire explainer: integrity and unbiased judgment. Pay very close attention to this. You could literally be the smartest analyst in the room, but without ethics, market में तुम्हारी कोई जगह नहीं है. The SEBI code of conduct is crystal clear. You must act honestly and in good faith. Independence and neutrality are the absolute core of institutional trust. Look, management will always try to paint a rosy picture to influence your report. So no sabke, but cross-verify every single claim. Your analysis must be entirely unbiased, rooted in factual diligence, and completely free from personal inclinations or any external pressure. Your unbiased judgment translates directly to the market through rating conventions. We use terms like buy, hold, sell, overweight, or underweight. These terms reflect your view on the expected stock returns over a specific horizon compared to the broader market. But listen to me carefully. Every single time you issue one of these ratings, it must be backed by relevant, hard data. It must never, ever be driven by personal bias, a desire to please a corporate client, or pressure from the management. Your rating is your promise of integrity to the investor. Finally, Section 6, the ultimate checklist approach. In Atul Gawande's brilliant book, The Checklist Manifesto, he divides human failure into two categories. First, errors of ignorance, which are mistakes we make out of a lack of knowledge. And second, errors of ineptitude, mistakes we make because we didn't use our existing knowledge properly. In our fast-paced market, we can't always control ignorance. Sometimes the data just isn't out there. But a disciplined checklist, that completely prevents errors of ineptitude, ensures you never miss a critical step when the pressure's on. So let's walk through a sample checklist you should be using for every single report. First step, business understanding. Do I genuinely understand the revenue model and how this business actually makes money? If you can't answer that in one clear sentence, why he rook jiao, do not move forward. Next, the competitive moat. Are entry barriers strong? Does the company have pricing power on inputs? Then management integrity. What's the quality of the management? Are they able, honest, and acting in good faith? And finally, promoter actions. What is the promoter's stake, and are insiders buying or selling? Using a checklist like this forces you to ask the hard questions systematically, ensuring absolutely no blind spots remain. We've covered a lot today, from the art of simplifying complex data all the way to the non-negotiable standards of ethical conduct. Your role here is an immense privilege, but it carries an equally immense responsibility. So I'm going to leave you with this final thought as you step up to your desk. Are you ready to protect your investors with absolute honesty, rigorous discipline, and uncompromisingly unbiased judgment? Because the market is waiting for your view. Make it count, our obligado.